Welcome into another Tax Talker. Today we are talking about tax payments and safe harbor. And I am coming to you sick, but I'm on the mend. And I've got a good one today. So there's really very few other concepts as important, especially for small business owners, than understanding their safe harbor payments. For anyone with variable income, you got two jobs or a job and a side hustle, if you've got that queasy feeling that taxes don't feel covered this year, maybe you owed last year, or you got more income coming in, or income that doesn't have tax withheld on it, you've got that worry about a balance due in April. You don't want to add to it with penalties for underpayment. By the end of this video, you will know the exact amount you need to pay in before April 15th, and then anything else, any additional balance, can be paid April 15th penalty free. Let's get into it. So let's start with what is the problem here. The problem is underpayment penalty. The IRS expects tax payments evenly throughout the year, and most of us never have to think about that as a W-2 employee with withholding. But you can also have quarterly estimates. You can also have a combination of estimates and withholding. That raises the question, withholding for what? You haven't filed the tax return. How much withholding? And it's not to cover all the tax due. It's okay to have a balance due in April as long as you hit safe harbor. You have to satisfy your safe harbor obligation. There is a specific target for each taxpayer that they can calculate based on their current year and prior year. And as long as they're paying that amount evenly throughout the year via withholding or estimates or a combination of both, then any additional amount owed April 15th can be paid without any penalties or interest. And you can see the power of this for a small business owner, knowing their cash flow needs through year end and then also through to April. And you can actually even calculate your safe harbor then starting for 2026. So that's the crucial piece here. It's not an issue of owing on April that creates penalty. Underpayment penalty is created by not meeting your safe harbor obligation throughout the year. Now, if you don't pay by April 15th, then you have a failure to pay penalty, and that's a completely different regimen. Today, we're just talking about underpayment penalty, and that's what did you pay throughout the year, and then anything else can be paid April 15th. So let's get into what is this magical safe harbor concept. It is the lesser of two possible numbers. It is 100% of prior year tax liability, or if your adjusted gross income is $150,000, you use a multiplier. It's 1.1, 110% of prior year tax liability. Number two is 90% of current year tax liability. So said within the framework of what we're in, we're coming to the end of 2025. So we're talking about number one, what's 100% or 110% of your 2024 tax liability, or what's 90% of your 2025 tax liability. The lesser of those two is your safe harbor number for the year. As you look at those two figures, number one is really easy. Number two, you might be thinking, well, I haven't filed my tax return. The whole point of this is I don't know what I'm going to owe. If I knew that, I wouldn't have clicked on this video. So that is the big difficulty, is number two, and that'll be the subject of our next video on safe harbor. Let's start with number one, because that is actually what most people in most situations are going to need. Income just tends to go up. Also, if you clicked on this video, it's likely a story of, well, you got more income this year, right? That's what gives you that queasy feeling of having a balance due. Maybe your side hustle's really taking off, or you got a second job. So in many cases, 2025 tax liability is easily more than 2024. That's what's creating the situation where you think you have a balance due coming up. What you need to do is go find your 2024 tax return, look at Form 1040, line 25, that's likely the second page of the return, total tax. What's that number? So check line 11 of the 1040 adjusted gross income? Is that number above 150,000? The answer to that is yes. Then take the total tax multiplied by a multiplier 1.1, 110%. If you're not over that, then just take the total tax. That's your safe harbor target. That's the key number you need to hit. So now that you have your target, you just need to add up your payments for the year. So you need to get your pay stubs. If you have a spouse, you need your spouse's pay stubs. Check your withholding number. You should have a year-to-date withholding number on your latest pay stub. Make sure to annualize that. We're pretty close to year end, so it's pretty easy to count out how many more pay periods you have in the year. If you're paid every 2 weeks or twice a month, what's the withholding number on each given pay stub, and then just multiply by the number of pay periods left in the year. That's how much total withholding you can expect from that pay stub. And you add up those from your pay stubs. Have you made any quarterly estimates for the year? Add in that. That's your total payments that you're going to have for the year. Does that hit your target? If it doesn't hit your target, plan to make a fourth quarter estimated payment to the IRS by January 15th. And we'll have the payment spot in the show notes that you can use. Like I said, for most people, that's as far as they need to go. Your 2025 is better than, or at least comparable to 2024, then it's not worth getting into how close, is 90% of 25 versus 100% of last year. If it's pretty close, just go with the number that's easy to know. It's a given. But that said, you could be in the case of, say in 2024, you had the side hustle and the job, and you finally left the job at the end of 2024. Now in 2025, the side hustle's the main hustle, and it's going well, but it hasn't fully replaced having a job and a side hustle. So in that case, you're looking at a case where 2025 liability is going to be much less than 2024, and it's worth trying to put a figure on that. And that's what we'll get into part 2 of the video. But again, for most taxpayers, just going through number 1 will be sufficient. And in fact, it does guarantee that you're covered for penalty just by going through number 1. It's possible, again, you could have a really big refund if 2025 is really low and you meet 2024's liability. You could have a big refund, but it does guarantee no penalty will apply. So note, quarterly estimates are expected to be made quarterly. So for this year, it's still good to get on track and meet fourth quarter. That will reduce your exposure to penalty. But that amount should have been paid throughout the quarters. So for 2026, plan to pay April 15th, June 15th, September 15th, and January 15th. This amount you're paying in by January 15th, still good, definitely going to reduce your exposure to penalties, but you will still have a little bit of an underpayment penalty because that amount wasn't paid quarterly. You could also increase your withholding and not have to worry about quarterly estimates going forward. That is the Tax Talker for today. Stay tuned for the next video where we'll get into basically running a tax projection. It'll be very bare bones, but getting an idea of what is 90% of current year tax liability. Where do I even start in getting that number? As always, subscribe, hit the like button, drop me a comment. Love to hear from you guys, and we will see you next time.